let's call them the common missed opportunities, the things that people don't think about. There's common strategies that a lot of businesses can deploy, and they're just not thinking about it. Marketing initiatives that work almost in every industry, having a set repeatable calendar that works on every single business.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today, as the Edmonton Business Consultant, we're talking about the business plan sections. Again, as the Edmonton Business Consultant, we're talking about the business plan sections. I have Tyson here with me again. Tyson, how you doing?
Good. Yep.
Tyson, any get to do anything interesting over the weekend? We're finally having some good weather here. No smoke. No.
I was just helping a friend set up for a music festival he's putting on next weekend. So,
wow, a music festival next weekend. So setting up the equipment and stage, or?
Well, I painted a stage and painted a bunch of stuff and set up a 200-meter slip and slide. So
200-meter slip and slides. Now you know what accountants do in their free time. So yeah. Secret's out. The quote that we have here today is a Benjamin Franklin quote. One of the founding fathers of the United States, and he says, "If you fail to plan, you are planning to fail." And the statistic that we always throw out when it comes to business plans is that business owners who complete a business plan are 50% more likely to grow their revenue than business owners that don't. But the story that we have here is, business owners, they think that doing a business plan is a good idea. Now they've gotten to the point where they think doing a business plan is a good idea, but they have no idea of what should be included in a plan. So Tyson, what are the questions that these business owners should be asking?
Yeah, first, most business plan templates are developed for lenders or entrepreneurs.
If you do some searches on the internet, you'll find that most of the business plan templates out there are designed by the lenders for the lenders. They have all of the things in there that are necessary for the banks to get the information they need to determine if that person is going to qualify for the loan, and determine their risk level on the loan. But I don't think they're specifically developed as much for the entrepreneur when it comes beyond, qualifying for a loan. I think they're very heavily geared towards, the benefit of the lender.
Yeah. Okay, well, in developing your planning template, what were you trying to eliminate?
I was trying to eliminate all of the, let's call them the common missed opportunities, the things that people don't think about. There's common strategies that a lot of businesses can deploy, and they're just not thinking about it. Marketing initiatives that work almost in every industry, having a set repeatable calendar that works on every single business. And a lot of the common pitfalls too. What are a lot of the common mistakes that business owners often make, and how can we, get them out in the open right off the offset, and make sure that we can eliminate those problems before there's money on the line. Identifying what the three major risks are of the business and how we're going to eliminate those risks. So I think that was our focus. It's not just to qualify for financing, but how do we guide them to those common missed opportunities and prevent those common missteps.
Yeah. What is the bank's reaction when they see your plans?
Believe it or not, the banks, they get the information they need. Our plans are very much designed that they can get financing with the plans, and they have all the things in there that are necessary to get the plans. But some of the items that we put in there are, the banks will look at them and they always ask, Josh, why did you include this in the plan? Why is this necessary? Things like the owner's schedule. Why did you put the owner's schedule in the plan? And I tell them, I was like, well, how can I possibly do realistic projections if I don't know the business owner's schedule? If that construction guy is trying to grow his business from $500,000 to $1 million a year, where is it in his schedule that he's going to do that many more estimates and that many more job site visits? So there's a complete disconnect. I think the bank likes you to grab projections out of thin air so they can check their check boxes on the ratios. But I'm more concerned, are those projections realistic? Can we actually hit those projections? Not just making them up to satisfy the lender's ratios.
Right. What's in the executive summary section?
So the executive summary section is, we're starting to look at, what's the problem, vision, mission, and values of the business. What are the products that we're going to sell? What's the revenue per transaction, the cost per transaction, the gross margin per transaction? We're going to start to look at things like what are those differentiation factors? What sets this business apart from its competitors? Who that target market is, who are we trying to sell this product or service to, and then usually tying it back to if there's any financing required, if we're asking for a credit card or a line of credit or a mortgage or a term loan, or if we're asking for investment capital. We're trying to be specific about how much we're asking for and what the terms of that arrangement are going to be.
Yeah. All right. What's in the company overview section?
The company overview section is almost one of those sections that's primarily developed for external users. So this is, telling people what the legal name of the business is, what the year end of the business is, who the shareholders of the business are and what percentages they own, who is the accountant, who is the lawyer, who is their banker, who is their investment advisor. These are all of the really granular things that the business owner already knows, but anybody who's looking at this plan for the purpose of providing financing or investment capital, they're going to want to know these items. So rather than create that unnecessary dialogue back and forth, let's make it as simple as possible for the people that we want money from.
Okay. What's in the market and risk analysis section?
So the market and risk analysis, normally we look at in the market, we look at how many customers that person actually has, how many more customers that they need. And then the risk analysis that's one of those really specific areas that I feel that's forgotten in a lot of plans. People are always talking about the positives and the growth initiatives, but we got to look at the risks. And I tend to focus on what are the three most significant risks of the business. And it's different for every business. Some people have problems with acquiring customers or cash flow or human resources. There tends to be, a list of 4 or 5, common risks that recur over and over. But rather than wait for them to occur, let's just, realize that they are a problem off the offset and how we're going to rectify them.
Right. What's in the sales and marketing plan?
Yeah, the sales and marketing plan, we're really drilling into, how many customers we need and exactly how we're going to get them. What exact advertising initiatives we're going to do to capture those new customers. How many and how much we're going to spend. How many times, not just we're going to do networking, how many networking events we're going to do. Not just we're going to drop flyers, how many flyers we're going to drop and how much we're going to spend on that. Not just do online advertising, how much we're going to spend. I find it, rather bizarre how someone can possibly do projections on growth without truly understanding the metrics of how they're going to achieve that growth and what strategies they're going to do to grow.
All right. What's in the operations strategy section?
The operations strategy section, now we're starting to look at, where they operate the business from, what's the square footage of it, because there might be operational constraints. For example, if we're trying to do growth, let's say if we have a medical clinic, they can only see so many patients at once, or a daycare, they can only house so many kids at once. We have to know what those logistical constraints are. Then we start looking at if there's any specialty equipment or software that's they have for this business that might be providing them a strategic advantage, or maybe this equipment is going to have a significant upfront cost if we have to purchase it or maintain it. But we're looking at a lot of those real logistical issues and limits. They're really the constraints, and sometimes they're opportunities too, but a lot of times they'll be guiding what that capacity of the whole organization is.
Okay. What's in the staff and key suppliers section?
The staff and key suppliers, now we're going to break down. First I start where the owner, and I start with the owner's actual schedule. And a lot of people think it's bizarre, but every business has an owner who only has 168 hours in the week, and it doesn't matter how much cash you have. You're bootstrapping it with no money, or you have $1 million to start it up. You only have 168 hours in the week, so that's the constraint. So let's identify how that business owner is going to spend those 168 hours, and how many are going to be used for business, and what functions that they're going to do. Because then once we establish what functions they're going to do, we know what they don't have time not to do. So we know what time, what time they have available and what time, is impractical. So then we start to determine what are the tasks that they're going to delegate to, and who are those staff and how much they're going to make. So, who are those, key staff, and what are those other general positions that they have to delegate things to. And those will effectively guide costs too, because we figure out what the business owner can do, what they're going to have to pay other people to do, and it's going to tell us how much we're going to need to fork out for employment expenses, for wages.
Yeah. All right. Well, what's in the projections section?
Now when we get to the projections section, I really like to do monthly projections, and I see a bit of a disconnect sometimes. Is some financial statements, they'll just do monthly projections for the cash flow, but they won't do monthly projections for the income statement or balance sheet. And I find that bizarre, because if you don't have the income statement and the cash flow and the balance sheet all working together, you tend to have a cash flow projection that has littered with errors. It just doesn't work. It doesn't balance, and if you don't get to the end of it, it doesn't work. So I like those, monthly income statement, monthly cash flow projections, monthly balance sheet, and then I'll tie it back to an annual income statement, an annual balance sheet, and an annual cash flow statement. But we get those monthly projections going, because there's a lot of stuff that can happen mid-year, and although it works out at year end, you might be broke in the middle of the year, and that's not going to help anybody. So we want to flush that out from the get-go. So I think that's what we have here today. Thanks so much for tuning in. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And as always, please leave us some comments below so we can respond back and use your input for future videos. Thanks very much.